What is up, Growth House family? This is Jesse Ray. I'm here with the man, Andrew Abernathey. Appreciate you being on the show, man.
Yeah, thank you. I'm excited.
I'm excited as well. And so I always like to tell people how I connect with certain people and how I know, these amazing guests that come on our podcast. This is actually our first time talking, so I'm even more excited. I found you through one of our good mutual friends, Brian Lubin, Action Academy podcast. Always got to shout him out. And I was like, this guy has an incredible story. At 18, and correct me if I'm wrong, but the story, this is crazy. At 18, raised $10 million in 14 months. And then now you're still super young, have a valuation in your company with self-storage. We'll dive into all that of $200 million. Am I
Yeah.
saying all these pretty accurately?
Yeah, no, right on it. We're about 190 to be exact, but close enough. Call it 200.
Damn, well, yeah, we got to round down on that one. And then I realized that you're in Scottsdale, which is where my home base is. So I'm looking forward to connecting with you in person soon. I know we're
Yes.
both, traveling for the summer. But Andrew, here's where I want to start. So I kind of gave people a sneak peek of what your life looks like now, but just in more maybe detail, what does that life look like for Andrew? How old are you? Because you still look super young. And then we'll take a step back and how that entrepreneurial journey start.
Yeah, I just turned 30 here in March, so I am
Oh, happy
I'm
late
in the
birthday.
30s club, man.
Hey, me too. I just turned 30 last July. So,
Oh, really? Okay, I'm about the
yeah.
same age. That's perfect. Yeah, so 30 years old. Been married for 8 years. Had our anniversary June 4th. 3 boys, 2, 4, and 6, and this growing business. It's a lot going on in my life right now.
I love it. What's the main project that you're most excited about?
So in Abernathey Holdings is structured similar to kind of a Berkshire Hathaway. So we've got two divisions currently. The largest is our self-storage, vertically integrated division. So we own the storage, we develop it, we run a GC company, garage door dealership, we do everything dirt to door, the whole process. That's one division. That's probably 95% of holdings. And then the other 5% was a company we bought back in 15. It's a municipal equipment dealership. And so we sell to the cities, states, and counties across the Midwest. We bought that in 15 and it started in 1947. So when it comes to what I'm most excited about, it's kind of split between the two of them. I mean, our equipment dealership, that was the first operating company we bought. And they were doing like $3 million a year in revenue when we bought them. We're going to hit 12 million this year on our way to 30. And so there's just a lot of fun things going on there, working on comp plans for the employees, working on some night shifts, just trying to pump out all this new business we've got with the facility we have to try to just keep our assets deployed under control. And then in our self-storage division, we've got every day there's always something. I mean, we've got 100 million in ground breaks this year. We're trying to get our land lined up for next year. We'd like to do another 150 million next year. So every day I'm flying over to Hemet, California on Wednesday to look at a site. It's crazy on the storage side.
Let me just ask you this up front, because I heard on a podcast the goal was $1 billion as you were younger. You're like, I'm going to be a billionaire. Is that still the goal?
Oh, yeah. I mean, I think I'd say realistically by 50, but I'm shooting for, mid, early 40s, but for sure by 50. And if and I always tell my shareholders, because we have 80 shareholders in holdings, and we've been selling shares, as you mentioned, since I started selling shares when I was about 14, but really ramped up raising money when I was 18 to 20 there. And, those shares have done about 21.4% compounding since the start. And when somebody buys into holdings, they're never required to sell. And everything I do is in holdings. So my goal is to be $1 trillion holding company someday. That's my goal.
All right. $1 trillion holding company by 90?
Yeah, by 90 is the goal. Yeah.
There you go. $1 trillion company by 90, billionaire by, let's just say, mid 40s.
There you go.
Let's take a step back. What was the path? Obviously, you started young. Did you even go to high school, or did you just start, raising money when you're in kindergarten? Walk me through this journey.
I got out at lunch every day, which is normal in a farm community. So I wasn't very good at school, which I've heard is common. See students, usually the entrepreneurs. I was for sure that. I never really had interest in it. Maybe if they put a dollar sign in front of the equations, I would have cared a little more. I don't know. But started really young. When I was 10 years old, I started helping my dad on the farm, running grain cart combine, $5 an hour. Was doing some marketing of the grain. making same $5-10 an hour. Worked at the local John Deere dealership. I was flown out at 14 to Delaware to work at a Chinese restaurant and a bed and breakfast in the summers. I mean, I did everything and anything I could. I was selling deer jerky at school that said "Do not resell" on the package. I was doing everything. So,
So was
anyway,
your parents were entrepreneurs and you just had this bug, or where did this come from?
yeah, my family's been farming since 1901. I'm the first one in the family since then to do anything outside of the farm. Um, I'm still involved in the farm with my brother, but holdings I started when I was 14, separate. But farming is a very entrepreneurial career. You have to be a marketer, an operator, a mechanic, salesman. You have to do everything basically. So I saw my dad and my grandpa and heard stories of my great grandpa and great great grandpa run this, build this farm, and you have to take a lot of risk, calculated risks. You have to make things work no matter how bad the weather is. And I just, fear is not in our vocabulary. So I guess in theory, yeah, I watched entrepreneurs, but it was just always in the farm. So I took it to a different industry.
So I mean, you're going to a different country, or not even a country, a different state to go work in this Chinese restaurant, and then high school. You went to high school, and then you started raising money pretty early. So walk me through the process of, your first shares.
Yeah. So when I was about 13 or 14, the market crashed in '09. And I had 6,000 saved up, but I had 4,000 because I bought a go kart for 2,000. Could you, yeah, of course. So I had 4 grand.
I mean, you could have spent on a lot worse things. So at that
Yeah,
age,
exactly.
that's impressive.
Yeah, that thing's worthless now. I wish I would have put it all in the market. But anyways, had to do something fun. Um, and when I was 14, March 23rd, my birthday, that was actually like a week or two away from the bottom of the market in the when the Great Recession hit. So I'm like, wow, this is interesting. Like at the time, I didn't know what that market was. I was 14. So I opened an account in my dad's name. I went and put 4 grand in Ford at 99 cents, Bank of America at $3. It was just dumb luck. I didn't know what I was doing, but just lucky on the timing. And then it took about 15 months or so, 14 months. That 4 grand was worth like $80,000. Yeah, just timed the bottom again, fortunate. And then that's when I cashed the 80,000 out, and we were custom combining in South Dakota, another odd job I did to make money. And we were driving back to the farm to cut our crop, and we're going through Bismarck, a town 3 hours from the farm, and found some apartments for sale, 1.25 million. I stopped in, met them, and I put my 80 grand down as earnest, non-refundable money. Could have been a big mistake. Whoopsie. And I went
Okay,
back.
hold up, Andrew.
Yeah,
Andrew,
yeah.
what's your parents thinking? You're just putting like you make 80 grand. Your dad and mom were just like, oh yeah, my son's a genius, or like,
My parents have always been. There's 6 kids in the family. I'm one of 6, and at the dinner table, my dad would and mom both would throw out topics, and whenever one of our heads turned, or you could tell when someone's interested, peak interest, they would then cultivate that passion on a one-on-one basis. And my sister was Miss Teen North Dakota, top 10 of Miss Teen USA. She went up to New York and did acting and modeling and all this stuff. One sister went and worked at Disney World and became a doctor. Everybody was taught to chase their dreams, and failure is okay. And so to answer your question, I had the best parents in the world, and I think from their thought process is like, hey, like let them go. And my dad was always there for questions and support, but I think he would rather me make mistakes at a young age, because if I would have lost everything, I was just like every other 15-year-old.
that's true,
No kids, no wife, no mortgage.
right?
Yeah.
Okay, so you see this $1.2 million apartment complex, you said?
Yeah, yeah, in Bismarck, about 3 hours.
Okay.
And I had some reasoning. I was doing a lot of research on history and the oil boom in North Dakota and the patterns and all that. So I went back to our small town of Mulhall, or by the farm, 3 hours from this property, and a town of 800. And I asked my buddy's dad, he's a banker. I'm like, yeah, I need 1.25 million. Here's 80 grand. I already got in an escrow account. And he's like, I mean, that's pretty impressive, but no, like you're like 15 years old or whatever I was, 16. And you need another 300 grand in a balance sheet. So I leave the bank almost sick because I'm like, I'm screwed. My 80 grand's gone. It's not refundable. Like I am so screwed. And so anyways, I got over my pity party quick, and I said, okay, well, how am I going to do this? And so I didn't have any money for a lawyer because all my money was in escrow. So I printed off Warren Buffett's original 1956 partnership agreement, whited the names out, and went to a farmer from Crosby, hour away in my dented up Lumina. And I basically made it a no-brainer. I'm like, hey, I need to do this deal. I will work for free, and if we lose any money, my 80 grand can be lost first. Like, made it a no-brainer. He signed up, went back to Vance, got the loan, bought the apartments, and that was that first deal.
That's incredible. And then how did that deal play out? Like, what did that look like?
Again, I always say fortunate for these first ones because I got a lot smarter as I went, but I'm lucky that these first ones worked out. The oil boom did hit pretty heavy, and there was 8 apartments lined up. I owned 2 of them. It was 2 8-plexes. And then there was an owner that owned these 2 and an owner that he owned these 2. And there was a middle school right next to him. So I got a call from the city or the school or something, and they're like, we'd like to buy your apartments. That was about 8 or 9 months after we bought them. They offered like 1.5 or 1.6, and I was about to take it. I'm like, dang. But then I was in Bismarck. I drove down there because I hadn't been there since, and I saw the other 4 apartment complexes, 2 on each side, were already torn down. They were adding on to the school, and I'm like, last man standing, right? So I held out. 3 months after that, I accepted a $2 million offer, and we after bank debt and everything, we netted about $1 million cash off the 380, $1.1 million or so.
That's
In like
wild.
16 months. Yeah, that was nice. Wish I had 500 again.
So at like 15 years old, you basically got to split $1 million profit on a deal.
Well, I was supposed to receive with my pro rata share probably $250,000, and I think he gave me like 400 because he was so impressed. So I got like 400 of it, and that's when Then I went back to our family lawyer, and I'm like, hey, I want to raise it $10 million. I was like 17, 18ish, and he's like, I need to send you to a lawyer in Fargo that has like a securities, like this is above my head. So that's when I drove off and I met a lawyer and drew up a whole PPM. Didn't even know what it was at the time, and I learned and spent 20 grand on that and started raising money pretty intensely.
What was the strategy going forward? Was it just like, hey, I'm liking these apartments, or like, what you raise money for?
Yeah, that's a great question. I didn't even know what the heck. Like when I was sitting there making the PPM, it's like all I knew is how much I wanted to raise, and he was asking me how about pref and high water and all these things that I know now, but I'm like, I don't know, 2% management fee, and so anyways, it was kind of a blank check fund. I basically just went door to door for farmers, and I just said, hey, this is what I did in the market. This is what I did in these apartments. Invest in me. I'm gonna go do some more cool stuff. That was pretty much it.
And you raised $10 million.
Yeah, which is, but timing's everything. It was for that from 2006 to 2012. There was the best farming in like 100 years. Everybody for the first time in a long time had money, plus the oil. So it wasn't like these farmers and everybody. I just went door to door. Every door I knocked on, I got 50 to 100K. They've never had money to invest, and nobody's going to Mohall to raise money. So it was just and they knew me and knew that the integrity of the family, and they knew that no matter what, I'd find a way to at least give them their money. You know what I mean? Like failure wasn't an option, really. But I learned a lot of lessons. I got that $10 million. I honestly didn't even. Once I got it, I was shocked a little too. Like it was such a big dream, and it happened. I got pretty distracted. Those were my distraction years. I'd say from 2012, 13ish to 2017. That was after high school. So my senior year until 2017. So I was about 24, 25. Those were my good at some stuff, but not great at anything years. Returns weren't bad. Our shares went from like 30,000 to like 50,000 in like 2 years. And then they went from like 50,000 to 70,000 in like 5 years. So it wasn't horrible, but I was in equipment dealerships. We had an insurance company on the NASDAQ that I had to change the law and Alabama to be on the board at 24 public company. That's a whole story. We had, real estate, HUD buildings, commercial properties. It just, honestly, it was just so much money at once. I had to go find investments and I kind of lost focus.
Mm. See, most people, when they say those ages and like, lost focus, they're out, getting drunk every weekend. And I'm like, doesn't seem like Andrew. And then you say, yeah, I just had too many businesses at that
Yeah,
time.
different
That's your
kind of
version
focus.
of distraction.
And I had fun too, don't get me wrong. But yeah. I mean, yeah, in the business world, I was, and I learned so much. There's three stages. I heard this the other day and I loved it. There's three stages also in success. The first stage is proving everybody wrong. That's stage one, right? You just want to prove everybody wrong. We all have our story, right? We all have our why. And usually there's some, a sad story in your past. Everybody has one, right? And then it goes to the ego stage. The ego stage is I want everybody to know I'm crushing it, right? And a lot of people stay in that stage too long. And I'm actually still kind of in it. I'm kind of on the tail end. I'm really consciously trying to like not be too egotistic, whatever the word is. It's hard though. It's a hard stage to get out of. Most people don't. And then the third stage and the most productive stage is building leaders, building others to be successful, but within your organization. It's creating other leaders and giving them the light. And so I'm coming out of stage 2 and working my way into stage 3. And not many people make that transition, but it's hard, right? I mean, when up raising money at a young age, I had to enter every circle talking about what I've done because I still have a baby face. So I literally had to tell everybody what I did because if I didn't, nobody would even know I did anything and I would just be some kid. Well,
Is
I
this
got
an
in that.
intern? Who's this Andrew guy?
Yeah, right. Exactly. So I had to like verbally tell people what I've done. And that became a habit. And obviously it worked for its purpose, but yeah. So
For
I don't
you
know.
right
I didn't
now,
mean to steal the conversation. I just thought that was a
no.
good topic.
No, I love to even dive in further. What's been the hardest transition going from that ego stage to, that next level of building leaders?
I would say I spent a lot of years alone, and now we have a 60-person plus team. So I to we, changing that verbiage. Um, and then the other thing is I really enjoy business. Like this is my passion. I want to do this till I die because I love it. And so if I could pick any conversation at any time of day with anybody I'm with, it would be business and money. And I don't talk about money braggadocious, wherever that word is. Again, I didn't do good in school, but I talk about it because I love it. I love business, and dollars just so happen to come with it for the story. And so it's really hard for me to make sure I read the room. You know, maybe a little autism in me. I'm not sure, but I just I just say stuff. I don't notice. So I'd say those are the two things.
What about, as you obviously have had a lot of success, what's been the biggest L you've taken? Because I feel like people always hear the highlight reels,
Yeah.
Instagram. All they see is, oh my gosh, look at all the great deals I'm doing. There's a bunch of L's usually in between. Call them
Yeah.
failures. I like to call them learning lessons. So, what's the biggest learning lesson that you've had?
Thanks for asking. That's a really good question. So in 2017, there's a reason I stopped my okay at everything stage. There was a traumatic experience in 2015, 16. We started making a position in a helicopter company. It was undervalued, selling below book. We put $1 million in. To give you a reference, that was about 5 to 10% of our company at the time. And we turned that million into 2 million in like 8 months, 9 months, and sold. Right? Story sounds good so far. Terms. So the stock we bought in at like $12, we sold that all at 20. Great. I checked back, same company, the stock went down to like $13 again. So I put $1 million in. Went back to like, it went down to 10, put another $1 million in. Went down to 8, put another $1 million in. Well, anyways, bad management got in there. I didn't own enough anywhere to have control of the company, so I had no control over management. And it doesn't matter. You have to read the numbers and read the people. So just because my numbers were right, which they were, I did not study the people, so I was wrong. Anyways, we lost it all. So we lost 15% of our portfolio in 2017, and that really sucked. That was a gut wrench.
What was the biggest learning lesson and like way to bounce back from that? Because obviously people are looking at you like, oh, I thought this guy had the Midas touch, and then you're like, well, I do numbers wise, but I messed up somewhere else.
Yeah, yeah, it was really tough. I have a lot of great shareholders, and majority of them have been with me for a long time. There was some shareholders that were questioning again my ability. Honestly, I was questioning my ability. I did it for so long, and honestly, what I was telling myself in my weak state was maybe I was just lucky. Maybe I'm not actually that good at this. Maybe it was all just luck this whole time, and blah blah blah. Right, that pity stage, and I let myself, be sad for a while and feel bad for myself. Blah blah. But after a couple of days, I read this book. I think it was in Charlie's Almanac, Charlie Munger. He said something like, the worst things in the world are, envy, and then also one of them was, feeling bad for yourself. Those are two things that'll get you nowhere, right? So I just said, okay, well, I gotta fix this. Like, this is gonna either be the worst stage of my life or the best turnaround story ever. And so I made it the best turnaround story ever. I reinvented it. We liquidated everything. We vertically integrated. We focused down on two divisions. And then I was able to tell a story in an elevator at that point. Unlike before, an elevator pitch was non-existent because it took me 10 minutes to explain what we were doing. I had it defined down, vertically integrated. I just made a whole new model. I got a billionaire to join us on a joint venture. I mean, I just lined it all up. And then COVID hit and all the stimulus money was sent out. And I said, okay, I've got the model, I've got the story, and everybody's got more money than they need right now. And so I went out and we raised like $40 million in like 13 months
Wow.
and blew it
I would
up.
love to actually dive in a little bit on that because for our audience, I love to have something tactical. We can hear great stories all day from people, and I think it's
Oh, man.
inspires belief in people. But to dive into something tactical, and I did hear you on a recent podcast where you said you didn't have that elevator pitch down. You're like trying to explain what you did, and it was all over the place. If we could spend a couple minutes, just like how'd you perfect that elevator pitch? And if you had some advice for other people who are starting off, who probably don't have 10 different businesses that they're trying to do, but they're more
Yeah.
just like, how'd you make that concise elevator pitch and tell your story the right way that attracted those investors?
Yeah, that's a good question. So I'd say even if you don't have 10 businesses now that you need to reduce down from, you might be in a situation like any entrepreneur where there's a lot of shiny objects. Like, I know a lot of entrepreneurs. I have this issue myself. It's really hard. There's no the idea. You just have to pick an idea and make it the idea. Okay. There's thousands of ideas. I mean, self storage is just something I grabbed. I could have grabbed five other things and vertically integrated and made it the idea. The problem is I just had to pick one and I had to, block out the rest. So if you didn't do what I did, don't do it and just focus on something. Okay. Even though, and it's hard with our personalities. So that's one. Two is if you're starting out and raising money, you got to make it a no lose for the investor, at least for the first part. Just like I did with apartments at the start. The money that I put in, I was willing to lose it first. I was willing to work for free for the first bit. Make it a no brainer if this is your first deal. I didn't know what normal was. I didn't even know what syndication was. So again, I think that was actually a blessing because I went into this not knowing anything and I just created a product that Holdings is a unique product. It's very unique and it always has been, but that's okay. So be different, be willing to work for free, give up, your first dollar and your only dollar if needed. The second thing is work with the end in mind because it's all about the story and they're investing in you. Okay. So for example, in our storage business, I did the math and said, okay, how can we make more than everybody else? Well, the answer was vertically integrated. So if we have our own construction company, GC company, and we have our own garage door dealership, and we have our own equipment, and we move it site to site, gosh, we can make 20% cash on cash before the doors even open. Plus we own the property. Like that's a no-brainer. That's a great story, concept. It makes sense. Okay. Well, again, work with the end in mind. How many do we have to build a year to have the volume to do that? I mean, you can't have your own GC company if you're going to go build one of these every 3 years. They're $20 million each, right? So you got to think big. Like, what is the number? I don't care what it is. I just need to know. Well, the answer was 6 a year. Okay, so $120 million a year in ground breaks. I need to have these verticals make sense. Okay, well, then I thought, then you work your way back. How much do I bring in a JV? If I bring in a JV, how much will they need? What do I need? And then you figure out that number, and that's what you work towards. Once you figure that out, then your next goal is peak efficiency. So my question was, if I build 7 a year instead of 6, do I net more per site? And I did that all the way up. I found out that peak efficiency is like 12. There's no net profit extra on 12 to 13, but there is from 11 to 12 and so on and so forth. So that's the next goal. So you have the first goal is to get to where you can have the verticals. The next goal is to get to where you have the peak efficiency. And then during the whole time too, you always want to think of byproducts. Anything that, like for example, John D. Rockefeller, no, not John, he's a good one too, but Henry Ford, when they were building the Model Ts, Model A's, they would take the boxes off of, everything was shipped to them in boxes, all the parts. They would use the boxes as the floorboards. And then when they would burn anything off, they would sell it as, I think, like coal or something like that. I don't remember that exact story, but they had these byproducts. I always be looking at things like try not to waste anything. So if you can do those 3 things on any scale, again, this example works for any size of business, I think, personally. Hope that helps. I know I went a lot of different lanes there, but if you can compact all of this and you're selling yourself, they're investing in you, and you can be excited. Remember, like at the dinner table, my parents were looking for passion, the sparkle in their eye, the change in their voice. That's what investors are looking for. You're going to be more successful if you're passionate about what you're doing. If you're selling something that 1 needs to be sold and 2 you don't have passion about, your odds of success are very low. So sell something that sells itself and that you can't stop talking about. You'll be successful.
So I don't want to distract you, Andrew, but stay in your lane, Andrew. But at the same time, what else outside of your lane are you like, ooh, that's a good industry to be in right now?
Yeah, I think mobile home parks are pretty awesome. They're not making more. They're actually being taken out of commission, being redeveloped. So you have a diminishing product. You have affordability issues with the printing of money and the deficits, which I don't see changing for a long period of time. So you have an affordability issue and the wealth gap, which is very sad, but a reality. And you have a lot of fragmentation in the market. So you have a lot of seller financing opportunities, things like that. And then the other nice thing is you can cost segregate. You can depreciate like 40 to 50% of it in a 5, 7, 15-year time frame. Right now, with bonus depreciation at 60%, you would basically eliminate all of your income anywhere as long as you're in active real estate, so you can use your passive and offset active income. I think that's very interesting. So you have basically all the things I just mentioned. You have depleting inventory, increasing demand, and tax efficient, and fragmentation.
You didn't get into this, or you gonna stay away for a little bit?
Well, I just put an offer on personally, not in holdings, because I got to try it. I just put a $20 million offer in on a park in St. Louis, 1,000 lots. I always like to test things before I put in holdings. I tested storage too before I put in holdings, just because I don't want to make any more mistakes in holdings. So I've done that. So yeah, I just put an offer in. So in a couple of months, I'll probably have a $20 million park in St. Louis. I bought 4, it was like 4 separate ones. There's 1,000 lots, 250 are empty. So we got them at a higher cap rate because they were smaller, so nobody was looking at them from the REIT side. So now they're 1, and then we're going to go fill the lots and make it a $30-40 million portfolio and sell it at a lower cap. You can, because with that back to how do you get bigger? That's your work with end in mind. If you can go over 10 years or 20 years, whatever, and you can buy up 3, 4, 5, $600,000 parks at a 7, 8, 9, 10 cap, and you can consolidate a bunch of them. If you can get it to $30-40 million portfolio, you'll get a premium, because that's where the REITs and the private equity groups will call you and say, I'll pay a 6 because I don't want to spend 10 years finding all these like you did. I got a buddy that did that.
That makes so much sense. And when you do your private investments, are you partnering with other people still, or are you like, hey, I'm just going to do this myself? And how does that work for you now?
I don't do it very often. This is the first time I've done it since I did the first storage thing. So again, I try to stay focused. But Somebody on a big investor of ours, he's on our board. That's how we made his wealth. He started with $10,000, and 10 years later, now at 35, he was 35, 33 at the time. He sold it to a private equity group in 22 for 32 million bucks, and he netted like 15 off of the 10. And so he moved here. He's on our board. He's helping us build our storage business. And he's like, hey, these parks just came up back in St. Louis. I've already got a manager. So I basically just said, hey, as long as you're in and the manager's in, we did some like profit share. I said, I'll put the cash up. So my other partner and I, we put the money up, and it just kind of worked out.
I love that you mentioned two things. One, obviously, you're in the storage unit space, and then the mobile home parks. I feel like the last couple of years in real estate in general, a lot of people are like, especially once they have a couple $1,000,000, they're like, hey, I'm tired of being a landlord. Like, this whole tenant thing sucks. It's
Yeah.
annoying. So, is that also the feeling that you had? And you're like, let me do something that's a little more passive, not as much headaches with the tenants, and then walk me through kind of why you went away from, it sounds like, multifamily and probably maybe single family as well.
Yeah. So everybody has to set their goals. I think this leads into this. I wanted to be a billionaire, not for the money. I'm going to give it all away, and I want to change the world with it. That's my goal. But I wanted to do that. And so I knew that I needed something scalable, and simplicity equals scalable. So I saw a lot of clunkiness and a lot of headwind in apartments. We had HUD buildings. I just saw a lot of headwinds in most real estate. I saw a lot of headwinds in acquiring properties and or renovating properties because there's unknowns and asbestos. I've done it. None of that. It was just always a surprise. So I found that printing a product development ground up with a national recognized brand with easy tenants. They run it. Like storage was just, affordability issues. So everybody can't afford as much house. They need storage. Millennials, drop shippers using it more. All of these things. So that's why I picked storage, and that's why I went away from the apartments and things like that. But if your goal is, hey, I want to be worth 10 million bucks, 20 million bucks, 50 million bucks, $100 million, I think your option for real estate is a lot bigger than mine. There's not much real estate that you can become a billionaire, trillionaire on. Our JV partner, my mentor, Gary Tharaldson, he became a billionaire. Grew up with nothing, not from a small town in North Dakota. Started in 1982. He's almost 80 now. He back in 1982, Marriott for the first time started allowing people to own the hotel, and Marriott would brand it. So in 1982, Marriott was 99%. They own 99% of the hotels. Today they own 1%. So they went from asset heavy company to an asset light business. The return on assets skyrocketed. Well, Gary's were the ones that owned those. So Gary's built 500 hotels in his career, became a multi billionaire, and all he did was vertically integrate and create a printing machine. I'm not really in the real estate business. I'm in the manufacturing business. I'm manufacturing self storage. That's just what I'm manufacturing, and it's manufacturable, right? I can go find a piece of dirt. I can build a $20 million product on it. I can print, 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 print. We can do a quarter billion a year. Public Storage brands them and runs them for us. It's a national brand. It's mailbox money. It's easy.
So you mentioned, okay, because I'm gonna wrap my head around storage, self storage. So I haven't really been in that industry or researched it as much. So you buy the land, you acquire the land,
Mhm.
you then have all the companies vertically integrated to actually make the storage units on the land,
Yep. Get the
and then
doors open.
you don't sell it to public storage. How does that work? What's your relationship with public storage and then your asset?
So this started in 2017. Public Storage is doing what Marriott did in 1982. So again, timing is everything. We were one of the first to sign up. Public Storage comes in and they manage it for a 4% of revenue. So we own the business, we own the building. They get a 4% fee of revenue, and then their employees in there. It's their employee, but we get a fee for that employee, but it's their employee. We pay pro rata share of marketing, pro rata share of general regional manager, pay a little marketing fee, but it's all pass through. So they run it, they do everything. It's their brand. You wouldn't even know which public storage is ours or theirs or some other third party.
Hmm, that makes sense. And then when you started these companies that were vertically integrated, did you buy them or did you start them from scratch?
The equipment dealership we did not, because remember I owned that in 15, that which was pre epiphany year of 17 of realization. That was the one thing we kept because it actually worked. So we still build and do municipal equipment across the Midwest, but we also build, develop our job trailers or our water trucks. We ship them and then we rent it to ourselves. So that one we bought and then basically added this business to it. Everything else we started, but we have individuals that have been in the industry for 20 plus years. So we have a guy that runs our construction company that's been in it for 30, 40 years. The guy that runs our real estate team for finding sites and development entitlement, he's been doing storage for 20 years. Again, it's all about the who, not the how. Um, I'll never be the smartest at anything going on, but that's okay, right? It goes back to I'm trying to get in the third stage anyways, and I'm just trying to build a really great team around me, and oh, they're amazing.
That's incredible. All right, we're gonna do a little role play. Two questions. You get to pick which one you want to answer. You ready?
Oh boy, let's do it.
Ladies and gentlemen, I did not prep Andrew for this, so give him some love. And also 5-star review and rating. Okay, Andrew, one of two options. If you wanted to help someone get to replacing their corporate income of $250,000 a year, what would be the best / fastest way to get there? Or if someone wanted to have $10 million in, we can say, let's just say a valuation of a company, what would you say is the best, easiest, quickest way to get there?
I would say because again, it's nice just to go focus on something. So what I would say is if you could start, there's not much money in property management, but it's a really good way to meet customers and product, kind of the conduit to acquisition, you might say. So mobile home parks is like a really good example, right? So let's say you have a mobile home park management company. It's really a niche product, right? You can go and start doing that. And the reason I say that is because then you kind of start having that income. You can be the one that goes and does things. So now you have that income. So you're not trying to work two jobs, but it's really there's no capital intensive, it's not really capital intensive, right? So you can get into that and then you can start meeting the owners and structuring these seller financing deals. So hopefully within 10 years. So I kind of maybe answered both questions.
I was about to say.
Yeah, the first would get you out of your job and focusing on a product you want, and it would also get you introduced to your people you're going to buy them from. And within 10 years, you could probably build up a $10 million net worth portfolio appropriately if you can be charismatic and get it done.
I love it. Man, I've never had someone answer that question so quickly and like saw both at the same time.
Yeah, I think that would be good. I mean, there's probably a lot of answers, but yeah, I think that could be good.
How much of a role did mentors and or community play in your growth? Because I feel like you were someone just very young. Obviously, you had brothers and sisters, your parents, but it
Hmm.
seems like you just had this innate desire to just like do stuff extraordinary, super young. And also, I like the fact that you didn't have a reference point. You're like, if someone else probably would have been around you, and been like, dude, this is not normal. You probably been like, oh, what's normal? And then you
Yeah.
probably would have shrunk your capacity. So it's probably kind of interesting that you actually didn't have a reference point.
Yeah, reference point was a good thing. I think curiosity is a huge superpower. Like I'm just really curious, and so being curious about everything and a self starter combined, it's a rare mixture. And again, I was that guy that I would hang out with people that were 50 plus. That was mostly my friend groups. Like when I was in Delaware and there was a table full of people that are very successful, I would run ahead of them, get right to the middle of the table, and then during supper I'd go down the line and be like, biggest failure, biggest success, go. Like I was like 15, 14 doing that. So yeah, they did, and they loved it. And so to answer your question, yeah, mentors and just learning from other people, like again the curiosity thing, that was everything. I read a lot of books, so I have mentors I've never met, people that are passed away, Rockefellers, all them I've read a lot about. Gary Tharaldson, a billionaire that is a mentor in person now, and then just a lot of people that are successful, maybe it's not even in business. My mom was the best teacher, my dad successful in business farming, but the point though is it doesn't even matter if they're a billionaire, just there's so much success out there.
What's your top 3 books that you recommend to someone about wealth?
I would say like documentaries. Give me more of a topic because I got a
I mean, you
lot.
mentioned Charlie Munger, you mentioned, Rockefeller,
Yeah,
just top 3. If you had to say like this is a good starting point,
yeah,
start actually not even a starting point because a lot of the starting points probably are similar, but just for you personally, that had the biggest impact on your life.
Yeah. The Outsiders is a really good book. It kind of explains a lot of the past companies and and the similarities of why they were so successful. It explains dividends and just kind of concept and mental thinking. Um, the Charlie's Almanac's really good. I just read that actually again. I really like that one. And then I'm a big biography book reader. Like Psychology of Money is a good classic, so that's another good one. But there's one that's called like The Gambler or Shoe Dog. So The Gambler is Kirk Kerkorian. Shoe Dog, similar to that one, but they're all like the storylines. Bitter Brew is about the Budweiser family. Those are really good ones just to kind of get that. I always get energy from them. Like, wow, this is amazing. And all the turbulence they went through and hard times. And I don't know. I think you can't go wrong with any of those. I got a whole bunch. I'll stop there. Yeah, I do about a book. I used to do a book every week or two. Now I slowed down to one a month to like comprehend them.
That's amazing. I'm
Yeah,
gonna have to get your
Ground
book list.
Rules. Warren Buffett Ground Rules. That's a great one.
Hmm.
Kind of goes through his partnership letters and talks about his way of thinking.
Yeah, I'm definitely gonna need that book list, man.
Yeah, yeah. I got plenty. You keep asking. I'll give you as much as you
For
want.
sure, for sure. All right, so Andrew, I want to, as we kind of wrap up, I want to change the topic a little bit. So a lot of us, as entrepreneurs, aspiring entrepreneurs, we get so focused on just one thing in life, and for most of us, it's just business. It's all we think about: relationships, health, everything kind of gets thrown out the way. But you started with a relationship, and it sounds like you got married pretty young. So what
Yeah,
was that like, and how has that like impacted your business? Because I think for me, I have this misconception that if I have someone that I'm seriously dating and married, this is gonna they're gonna take away from all my time. And I'm like,
yeah,
I'm looking at Andrew, and this guy has kids, a wife, and he's still crushing it way beyond me. So it's definitely a misconception. So I want you to kind of like, just talk about that a little bit.
yeah. I've tried to do as amazing as I can in all the departments. So there's 5 F's, right? There's for me, anyways. Fitness, finance, friends, family, and faith. I think I got them all there. Recently, like the last 12 to 15 months, I've been striking all 5. I've been doing a really good job. I've not been perfect in every single one the whole time, but I did get married at young. I was 21, 22, first kid at 23 ish, 23, yeah. And the best thing I could have ever done, and I wasn't really looking for it, wasn't going to make myself do it, but I really wanted a life partner. Like I wanted someone that I could grow this with, because then it's ours, it's together. And picking a life partner is probably one of the most important things you'll ever do. What do they say? Keep your eyes wide open when you're looking for love, and then keep them half shut afterwards, or whatever that saying is. So yeah, I mean the grass is greener on the other side. I mean all these things. It's just never worth it. So I found the love of my life, and again, I probably could have been happy with hundreds, thousands of women, right? I mean, it's just mathematically speaking. But I found the one that I love, and we have an amazing life together, an amazing relationship. She's always been behind me, and I've been behind her. And so that was really big for me. And then the kids, right away I did struggle a little bit on the presence. I was always present, but not present. And I think a lot of entrepreneurs struggle with that. I just think that's something that I had to overcome. My wife is very patient with me, and now I'm really good at that. So every day now, fitness was really bad. I was not that attractive there. Not saying I am now, but like my body was like ugh, up and up. It was like end of 22. I'm like, Lace, I gotta get. So I got a trainer, and I'm like the best shape I've ever been in now. So now I just every day I just those 5 things: faith, like the fight, faith, fitness, family, finance, and I missed one. But anyways, every day I look at those, and I have a scale like what is faith to me, right? Like some people maybe it's not even on there, maybe it's not even a thing, or maybe it's I gotta go to church every Sunday, or maybe it's whatever it is doesn't matter. What's fitness to you? What's finance to you? What's level of success? Write it down, and then every day just see where you're at, and just try to make sure you're always balanced. Because if you just do one of those things or two of those things, you're gonna fail somewhere.
Hmm.
Most people just focus on finance too much, and the rest of their life falls apart, and they regret it.
Do you try to balance all year round? I'll kind of give you an example. So I think Brian also has a similar kind of thought process, is where we have like seasons where we're, locked in. hey, guess what? You're not going to hear from me. I know you're one of my close friends. Hey, family, I'm just going to be ghost for about 3 months because I'm just locking in for this time of the year. So, how do you balance all five of those F's all the time, or do you?
Yeah, I try to be really consistent on like, the fitness thing. Like, it's not perfect. Like last week, I only worked out once just because I was traveling, but 3 to 4 is kind of the average. And then communication is really big. So you're right. It's never going to be perfect. So like, if I've got a week where I got to go do a bunch of traveling, like I'm just like, hey, Lacey, you're going to be 100% this week, or if she's off or traveling the next week, she'll be like, hey, I can't be, I can't be 50-50 today because I'm sick or traveling. So you just have that communication. It's never perfect. I don't think I have it like exact seasons. It just kind of happens. Um, but just make sure you keep track of it. Like, don't don't stop working out and forget to work out ever. Like, don't stop paying attention to your kids and then get in a habit and stop doing it. Don't fall out. Always keep dating your spouse. You know what I mean? Like, seasons are fine. It's the people that forget to like get out of that season. That's where it gets dangerous.
So true. And obviously, there's like non negotiables, like you said. You got
Yeah,
kids. It's not like you'll be like,
yeah.
hey, kids, I'll see
Hey,
you in
see you
three
in a month.
months.
Yeah, and
Yeah.
honestly, my wife and my kids probably, I not probably factually, they have made me a better person.
Mm.
I love to have fun. I love to travel. And I think I could have probably got a little too addicted to both of those things without a family to keep me grounded. So it was a blessing for me.
Amazing. One of the last questions, you have that $1 billion goal, but then you also mentioned giving it all away.
Yeah.
What does that look like? Why? And I guess also just like what's the thing that drives you? Because obviously most people don't strive to be a billionaire. Most people don't want $1 trillion company. So what is striving? Like what's the why behind Andrew?
My mom, again, I talk to my family a lot. My mom was a teacher. She changed minds of all these kids. My dad was a farmer. He fed the world. My sister's a doctor. My sister works at the church. I mean, all of these careers are impacting the world. My talent, my passion is making money. And so I'm not going to change the world by being a teacher, a doctor, or food. I'm going to change the world by giving the money I make away to the world, to make it a better place. That's how I'm going to give back. I love to make money because I love the challenge and the curiosity and the goal, and it's hard to do. I don't need the money. I mean, trust me, I'm going to live a good life. I would like to get a NetJet subscription someday, but I want my kids to have enough to do anything, but not too much to do nothing, as Warren Buffett said. So, I'll probably leave them something, but 99% of my wealth will be just want to give it away. I mean, if I gave my kids, billions of dollars each, I don't think they or their kids would be as good of humans as if I didn't, personally.
Mm, that's deep. I love it.
Yeah, so that's
Andrew,
kind
there's gonna be people that want to follow, reach out, but Andrew, you're not someone who has like a course. You're not someone who has something to sell people. You really just have the holdings company that you're looking to grow and expand, and your
yeah.
business is. So, who are the people that you actually want to connect with?
I love anybody that we don't have any shares or anything, that we haven't issued shares forever, but I always love having a buyer's list when somebody wants to retire. We don't do dividends, so when there's a guy that's 90 and he wants out, it gives me joy when I get my list every week and there's more buyers wanting to buy and there's no shares. Like, that excites me. So I love making money for good people. I vet every partner. I'm looking for good people. If they want a place to put some money and they're credited, qualified, great. But I mean, at the end of the day, I just really like coming on. I hope my story and the things that I've learned, I'm a conduit. I hope it can help someone. If it helps one person, then that excites me. So if you want to follow me on social media, again, I don't sell anything or anything like that, but I just I enjoy people, good people. Yeah.
He actually does
What's
the
the
work,
best
ladies and
name?
gentlemen. He actually is in the field.
Yeah, yeah. You can follow me.
he's
I got
he's in the arena.
Yeah, I got most of my stuff's kids' wife, but I'll put in some storage stuff, and yeah, I hope whatever I'm
So
saying and doing helps others.
So obviously, Growth House, we're very much a go-giving community. And if someone wants to reach out to you, we provide value first. If anyone says, hey, Andrew, can I pick your brain? I don't know them. And if I do, I'm going to tell them to never talk to me again. So
Yeah,
with that being said, if someone could provide some value to you up front before asking you anything, what kind of value? It could be something small, it could be anything.
Um, I started up this foundation a couple years ago, and we fight human trafficking. So that would be a lot of value to me if somebody wanted to give to this organization for fighting human trafficking. I think that'd be really cool. And anybody who wants to do it in a big way, I'd be more than happy to even spend a day with them if it's a big enough dollar. You know what I mean? If they give the money to the foundation, the unseen, but that would be pretty valuable. It'd be pretty
That's
awesome.
amazing. I love
And
that
if you have any
answer.
sites for storage too, I mean, we're looking for more land too. But
There you
uh,
go.
yeah, if anybody wants to give a bunch of money to human trafficking, heck, I'd do about anything. I sold it. We were at an auction this last weekend, and I auctioned off a day with me for 22 grand, and it's all given to this unseen. It's called, and that was pretty cool.
That's
Made me
amazing.
happy.
Unseen.com, is that a place for
Yeah,
people to go check it out?
unseen.org. I believe it's unseen out of Fargo, North Dakota. I think it's .org because .com was taken. So yeah, unseen human trafficking. It's the most efficient and best nonprofit I've ever seen. I actually went to Thailand and met some of the partners there myself. So I vetted it. I love it. I look at giving like making money. Find a really good, efficient, well-run business with a great leader, just like nonprofits, and invest heavily. And scalability. And this has every one of those.
Andrew, that's incredible. That's a mic drop. We're ending it there. Jesse Ray, Growth House Podcast. It's an honor to hang out with you, man. Our motto is you become who you surround yourself with. And it was an honor to hang out with you for 50 minutes, Andrew. And I'd love to connect more. And, we're both in Scottsdale, so we'll have to meet up sometime.
Let's do it. Thank you so much, Jesse.
Absolutely.